Hey everybody, Courtney Smith here with another question from a valued, fully paid up member, Les. So he asked the question, what are the best Forex pairs to trade? So let's take a look at this because there's really only a few criteria, and I'm also going to tell you which pairs not to trade. Okay, so you're going to get a double whammy on this particular video. So let's dive right in. So what am I going to look for? Well, the first thing I look for is liquidity. Now, I need to back up just 1 second. I was a Forex dealer, and I've literally traded tens of billions, maybe hundreds of billions of dollars of foreign exchange. So I'll tell you what I looked for as a pro Forex dealer and trader. Now I'm a trader, not a dealer, but I worked for big banks and I was the treasurer of a Swiss bank. So we dealt foreign exchange. So trust me, I've been in this business for a long time in the Forex dealing and trading business. Actually, some of the very first trades I ever did were in the Swiss franc back in the early 1970s. So I've been living and breathing Forex for a long time. The number one criteria is liquidity. I want the tightest bid-ask spread I can find because the bid-ask spread is going to be a cost of trading. There's no commissions in foreign exchange, but the difference between the bid and the ask is your cost of doing trading. Now, liquid instruments like euro versus dollar or US yen, they're very, very liquid, and so the bid-ask spread is very narrow. But if you were to trade Sing dollar versus Polish zloty, the bid-ask could be very wide, so it just doesn't make sense to do that. Now, the bid-ask spread is particularly important if you're a day trader, less important if you're a swing trader, and not very important if you're a position trader. So keep in mind, the shorter your time frame is, the narrower the bid-ask spread should be. So that's the first thing I look for. The second thing I look for is focus. Now, what do I mean by that? This is something that's never talked about. But for example, let's say I'm looking at Euro US, and I see that Euro US is going down. Now, one of the key questions you have to ask yourself is Euro going down or is US going up? What? Let me say that again. If I look at my chart and I see Euro US going down, remember it's a pair. So is it because Euro is going down or because dollar is going up? Well, how do you know? It's very simple. Go look at US yen. If US yen is stable, it means that Euro is going down. If the US is gaining on the yen as well as on the euro, then it's dollar strength. Now go and rewind that and listen to it closely because it sounds confusing even to me as I'm saying it. But basically you just look at a different unrelated pair to determine what the focus of the market is. So let's say, for example, that we're looking at Euro US. We see Euro US going down. Then I see, oh, well, actually it's not Euro weakness because Euro is very stable against yen. Euro yen not really moving, so it must be dollar strength. So now I go look at other dollar pairs that are correlated with the euro. So I'm going to look at Swiss franc, I'm going to look at British pound, and I'm going to say which one is the weakest against the dollar. That's the one I want. So I may see Euro US going down, but then I notice that actually pound US is going down even more. Sell that which is weakest, buy that which is strongest. One of the most important trading principles you can ever learn. So we'll sell the weakest, which in this example was the pound. So go after that one. That's what I mean by focus. Figure out what the market is focusing on and concentrate on that pair. Now, there's one other factor. So basically, I trade the 8 major pairs. Okay, that's what I trade. I hardly trade anything else. So let me go to my, because that if I trade the 8 major pairs, that's like 99% or 95% of all foreign exchange trades. Well over 90% of Forex trades have USD in the name. So really, we're just trading dollar. Now, I do trade euro yen and euro pound, But those are the only real cross rates that I trade. So that leads me to my third point: don't trade bogus pairs. So I gave the stupid example of Sing dollar versus Polish zloty. There's no such pair. There's no such pair. I'd sit there on my Forex desk, and I ran a Forex desk for a major French bank. I was the treasurer of a Swiss bank. So for those years, I traded and dealt foreign exchange in, well, literally billions and billions of dollars. Okay. If a customer came in and said, give me a price on Sing zloty, we would just look at dollar zloty and dollar Sing and add the two together and give that price to the customer. There's nobody trades Sing zloty. So what I do is I look at a lot of these Forex dealers, and I'm an introducing broker to a Forex dealer, not for Americans. Americans aren't allowed to talk to me about foreign exchange, but for non-Americans. And you see all these, like, incredible numbers of crosses. There's no trade there. There's no trade. They're artificially, mathematically generated by looking at, like, if I do Aussie yen, there's a little teeny bit of actual trading in Aussie yen because there is some trade between them. But Singapore and Poland, no, there's none there. Everything goes through dollars before it gets to Poland or Singapore. So some crosses that are even a little popular, like Aussie yen, there's no real trade there. So what the brokers do is they take Aussie US and dollar yen and they just mush them together. So you pay usually a much wider spread when you trade these, what I'm calling bogus pairs. So stick to the big eight, okay? Now, if you're a long-term position trader and you want to trade Sing zloty, no problem, because the big bid-ask spread isn't going to really affect anything, okay? But as a day trader, you're asking for trouble. So try to focus on the big eight pairs. That's 95, 96, 97% of all foreign exchange dealing in the world. All right, everybody, I hope you like this. And if you have any questions, or comments, put them down below. Subscribe, hit the notification button, like. You do all that stuff. You know what you're supposed to do. This is now your turn to do some work. Talk to you later.